What's up, crypto legends? The price of Bitcoin in the next 48 hours is going to get an explosive move. That is whether we do hit $36,000 or drop beneath $34,000. Whatever comes first, I think the price will reverse, and I'll explain right away. There is a bunch of liquidity sitting beneath $34,000 that is likely to be hit here in the next coming days. We're analyzing the situation here. We did get a big rejection from the value area high. As you can see here on the chart, we pumped here this morning to that level here, breaking above resistance, and then get this massive rejection. What does this mean? Can we have another chance here in breaking to the upside, or are we going to retrace? We're going to talk about the most important levels where we could reject and we could bounce, guys. And obviously we are taking a look here at some very important situation worldwide. We do have the yield curve here that is inverting, as you can see on this chart, meaning that we could be seeing that recession here in the next 6 to 12 months, guys. So make sure to stay tuned in this episode. Hi there, Andy here. Welcome back to another episode, guys. We're going to dive in right away here with the Bitcoin chart on the 4-hourly on the Coinbase chart. We can see that this resistance here was broken from this ascending triangle. We dipped beneath the level, managed to react as resistance, then came back down here holding higher low support. This pattern is finishing, okay, in the next 48 hours. We're going to see an explosive move, whether that is to the upside or to the downside. If we do break to the upside, we got the big resistance here at $35,200. This is a big level here, as you can see, respecting very nicely as resistance and support. If we do break out of it with a huge amount of volume, it is going to be looking very good for the price to retest the highs here at $36,000. However, the volume needs to be very explosive. We're going to have to be analyzing the situation on the lower time frame to see if we are going to break out here with high volume, because not only we do have the 618 Fibonacci from pivot high to the pivot low sitting here above the resistance level. So we need to be very cautious here on the possibility of a rejection and a failed move here above resistance, because then we are likely to fail miserably and break beneath here the support of higher lows to claim all of the liquidity that there is beneath $34,000. This is an event that is going to happen, guys. If you want to be ready to trade these kind of opportunities, you want to check out Bybit. Of course, they have the highest volume out there. I've been trading there for over 4 years. Right now, I cannot trade in Bybit. I will be coming very soon on Bybit. I am trading on Mexi. You got a great bonus on Mexi as well of $20,000, okay? Check it out, guys. $20,000 worth of bonus. By the way, you know, I'm aiming for that 5%, sorry, for the 7 days here. And so far, so good. I got 0.8% still to do by Sunday for that 5% in the week, guys. Here I'm using Mexi, guys. Mexi is great. They have the lowest fees out there. Of course, they do have a great bonus as well for $20,000. If you can trade on Bybit, I would suggest Bybit. It's been my number one. I've been trading there for over 4 years, and it's absolutely great. Check out the links, guys. You got a great bonus on Bybit, on BingX if you want to trade stocks using crypto, or Mexi, which has the lowest fees. The best bonus, of course, is on Bybit. Now, diving in here through what is the scenario. We haven't broken above the value area high. Look at this massive rejection that we did get this morning here. We attempted to break, but look how we had a massive wick coming back beneath the level. No doubt that we are still creating higher lows. What are the most important resistance zones? I'm going to say them right away here looking at the Bybit chart, of course. Now, it's going to be very, very difficult for the price of Bitcoin to explode out from this level during the weekend. In between today, Saturday and Sunday, we don't usually get that volatility of $1,000, right? We don't pump $1,000 or drop $1,000 or over, right? They usually, you know, volatility is around about $200, $300, $400 on average during the weekend. Of course, there are some weekends that you can suddenly see an explosive move here to the upside or to the downside, but usually you don't get that massive volatility. So any attempt in breaking resistance, in my opinion, in between today and tomorrow is going to be a failed move, whether that is to the upside or to the downside. So if we do start breaking here, the value area high, we want to be extremely cautious. We need a very large amount of volume and candles closing above this level, 15-minute time frame, 1 hourly candles breaking above, and huge, massive volume for the price here to have continuation to the upside. We got a big level of resistance, which is the 50% Fibonacci from the pivot high to the pivot low. Very interesting level, because what could be forming here is a kind of inverted head and shoulder structure, as you can see on the chart. Okay, so if we do manage to break above 50% Fibonacci as well with some intense volume, we'll be getting rejection very likely from the 618, but we could be scaling up here. I personally don't think that this is going to happen during the weekend. We usually don't get much volatility, so I would be eyeing that big rejection zone, being the value area high of the range. Okay, we could be hitting that level, attempting to break out, and on the lower time frames, creating those kind of double tops or double bottoms. Okay, if it's to the downside. So if we do break out here from the value area high, big rejection, as you can see, then holding as resistance and having that continuation to the downside. So stay cautious. Breaking here above this level needs to be very explosive and high volume. The moment you do get choppy action like this and you do create a kind of a double top, no volume at all, during the weekend, this is likely going to get that pullback to eat up all of these higher lows. That is just very likely to happen if we are going to have this attempt during the weekend. There's no real volume. There's no real power to push the price to $36,000. It is unlikely, of course, anything can happen at the end of the day, but it's usually not happening, during the weekend, getting $1,000 pump or dump, all right? We don't get that volatility during the weekend. So pay attention to that level. The value area high, if we do create choppy action here to the upside, and it's very choppy and there's no volume, and we are creating, slightly those small internal swing failure patterns, this is likely to reverse. Of course, if we do get that explosive breakout with high volume closing, 1 hourly candles here, very intense volume, we would be looking for that continuation to the upside very likely. Okay, guys, something to be paying attention. What are the strongest support levels? Now, the resistance are clear. Value area high, choppy action above it is going to be weakness. With no volume, with high volume, it will be a sign of strength. The next level would be, of course, 50% Fibonacci. We'll be paying attention to that zone to see if, we are going to get rejected, right? This could be easily a retest, liquidity grab, and bang, smack back down, okay, to retest the value area high of the range. On the other side, if we do come down here to lower levels, of course, the strongest level that we do have is the point of control. The point of control of the entire range here of the last 10 days is sitting here at $34,450. When we zoom in on the lower time frames, we've had a really nice pump here from the lows created yesterday at 34,150 to the highs of this morning. We can see that that point of control is very near the 618 Fibonacci. It could be that we are going to be holding that level. I would want some magic price action, as I say, with the Legends community, for me to be confident to enter a long position at this level, because this is just holding the higher low support trend line by a thread. We need to be very cautious with longs over here, just in case we do get that breakdown. Now, I would want to see that level hit. Of course, we do have some attempts on the first scenario here, on the first touch, where we could be jumping in straight away here for that bounce. Of course, what could happen here is where you do get that bounce, and we do, remember, get in on the bounce, okay, on the lower time frames. We do not catch a falling knife. As soon as price recovers, that is when we want to get in. We got the point of control, 618, that could be holding very nicely. However, it could roll back down, retest the lows. It likes to retest the lows or the highs, Bitcoin always. Now, you need to get in at the lowest point possible on the movement to the upside as it creates that failed breakout. So a very interesting zone here. If we were to get that pullback here of $300, we got the most important zone here being the point of control, the 618 Fibonacci. When we zoom out, also it is in confluence with higher low support here that we are still holding, okay? So pay attention to that level here. Stay cautious, guys. Stay safe. And let's analyze this situation over here without saying, I was going to say goodbye now, but talking about here the Treasury yield spread curve, which is actually here inverting. And every time we inverted in the past, we saw the recession. Now we can see here in the early 90s, we can see here the yield curve having here to going to the upside, entering that recession. Also the early 2000s, the dot-com bubble, we had the inverted yield curve. Also right over here in 2007 and 2008 is when we did see also the housing crash. And right now we are seeing the yield curve here inverting, meaning that there is a possibility here in the next 6 to 12 months that we are finally going to see that recession, like big investors have been saying here for almost a decade right now, right? We did get a small little one here, obviously, with the C19 crash in 2020. You can see here this gray line over here. This was basically a mini recession because the money printer went on instantly and printed trillions of free money for everybody. So we didn't see a big major impact here on the C19 crash. But what is coming right now here, the yield curve is inverting and it could go to higher levels in the coming months, meaning that that recession will likely start kicking in between 6 and 12 months, guys. So stay extremely cautious here. Now, this is not something that I want to bring fear to the market. Of course, we could be kicking the can down the road for another couple of years, guys. I'm not predicting that there is going to be a recession, but here we can see with this chart, it's been, really accurate in the past, okay, during the last, five decades. So just something to be cautious. That recession might come. However, maybe this time is going to be different and it won't happen. We're going to kick the can down the road for another few years. And they are predicting a possible recession in 2026 or 2027, that we are likely going to see the S&P 500 hitting all-time highs again by next year, and everything's going to be fine. The money print is going to go on for a little bit. Inflation will be a little bit out of control for the moment. So maybe it's going to be in coincidence with a massive epic bull run for Bitcoin in 2024 and 2025. So yeah, this is like, I cannot predict what's going to happen, but overall, this is an interesting chart to pay attention, okay? The yield curve turning at this point, and it has predicted really nice recessions, okay, during the last 5 decades, okay? Something to take into consideration. Every time we dip beneath the zero zone and invert here, then obviously it is followed by a recession here, as you can see on the gray. Something to take into consideration. We are actually flipping at the moment, so something to pay attention to, right, in the next 6 to 12 months to see what happens. Guys, thank you very much, and I'll see you in the next one.